the economy collapsing before it happened? Did it catch you by surprise?
Caught a lot of people by surprise, including me. Didn't catch Michael Burry by surprise, though.
Past a little bit, just your journey growing up. Are you from Toledo area?
I'm from Northwest Ohio, but I'm not from Toledo.
Well, in 2008, when the economy collapsed or whatever, you missed all of that. You were in banking at the...
Maybe some inflated valuations. And without making too many accusations, here's the cost of everything that I need to get off the ground and running, plus some working capital.
So today, welcome back, guys, to Nothing Fancy. Today, I'm joined by Dan Danuso. He's the Vice President of Commercial Lending for First Federal Lakewood. And today, we're going to be talking about his story. We're going to be talking about commercial lending a little bit. You know, I want to pick his brain about really the process and help small businesses or just businesses in general figure out the lending world. But first of all, how you doing, Dan? Thank you for joining.
I'm great. Thanks for having me. Thanks for inviting me on. I appreciate sharing a little bit of time with me.
Yes, sir. Yep. And how was Christmas?
Christmas was fantastic. It was. We hosted. I did a turkey on a big green egg. So I don't know if you've ever seen those big green eggs. They're like a ceramic grill, and you put this lump charcoal in it.
Yeah.
So
Yep.
I did a turkey on that. We did a ham, and had a really nice Christmas. Saw some relatives I haven't seen in probably about 20 years, actually. One family.
Wow.
So it was nice. It's nice to catch up.
So let's talk about your past a little bit, just your journey growing up. Are you from Toledo area?
I'm from Northwest Ohio, but I'm not from Toledo.
Okay.
So I grew up in a town called Archbold, or outside of it, actually. That's Souter Woodworking there, Souter Village. And I attended Archbold Elementary. But that's probably about an hour west of here. And it's, not too far from Michigan, not too far from Indiana. But it's a very rural, a lot of farming, a lot of manufacturing. So that's where I grew up until I moved out east, actually. And I was in New Jersey and New York for probably about a decade.
Really quick, was your whole family in Archbold?
So my immediate family, parents, my sisters, yes. My grandmother, my mom's side of the family is from a little town called Fayette, Ohio. We still have some relatives there and right outside of there. So my mom's one of, I believe, 11 kids.
Oh, wow.
And my dad's one of 5. Now, my father and his family came up when he was in, I believe, high school from like southern central Ohio to northwest Ohio. So I have family all over the place, especially with 11 aunts and uncles and then all those cousins.
Did you guys ever do family reunions?
Yeah, matter of fact, we just had one this year.
Really?
We do one, excuse me, on my mom's side. Last name's Bingman.
What is it, Bingman?
Bingman. Yep.
Bingman.
Bingman. Bingman. So that family, we do one every summer up in Harrison Lake, which is in Fayette, Ohio.
How many people show up?
It varies. This year, I bet 40. There's some years it's double, almost triple that. It just depends on, when it's being hosted and who can attend.
That's crazy. I've always, do you feel like, I've always wanted to have a family reunion, but I don't have a big enough family. But do you think those like types of things are dying out?
Probably. I think with all the distractions out there, as busy as folks, I think it's easier to make excuses, especially with like text messaging.
Right.
And email. Not that my family emails, but we certainly do text. And so, yeah, I think it is dying out. I also, I feel like focus on nuclear family, maybe has changed from where it was when I grew up and how important family was. One thing that I miss, speaking of Christmas, was the big family Christmas that we would have So growing up, my family had a small little working farm right next to my grandmother's farm, and that was a much larger scale operation. Historically speaking, or my family tradition, the Dunson family tradition, was we would have our Christmas, our small family Christmas, on Christmas Eve. So my mom, my dad, my two sisters, we would open presents. We would, read the story in the Bible about the birth of Jesus, and we, have some snacks and do that. Because Christmas Day was my grandmother's, my dad's mom's Christmas, and that's when all the uncles and aunts and nephew or cousins and everyone would come in, and that was a pretty big ordeal.
Yeah.
Now she unfortunately passed away early on. She was in her 60s, and I noticed with that maternal presence, she was almost the glue of that side of the family.
Yep.
My grandfather, my dad's father, he passed away of a massive heart attack when I think he was 51.
Oh, wow.
So I never knew him. Matter of fact, my older sister was in the womb when he passed away. So he never met any of us grandkids.
Yeah.
It was always just grandma. So I don't have a perspective on what it would have been like with grandma and grandpa there, but I only experienced just the grandmother part of it, and she was the glue. I mean, she kept all the kids closer.
And she migrated here, right?
So my mom's mother did. Yeah.
Okay.
So my grandmother on my mom's side is from Norway. And so her family came over, I always say on a boat in the 30s, and they made their way here as immigrants and, built a life and family. The funny thing is, growing up, I don't remember my mom's mom, my maternal grandmother. I don't remember her having an accent at all. But she was very young when they moved here.
Yeah.
My dad's side of the family's been here for a long time, generations. But on my mom's side, the Norwegian side, my aunt at one of our family reunions, they'd rented some cabins out, and my Aunt Mary had been researching our family lineage on the Norwegian side for a very long time. She put a lot of work into it, and she had all these timelines where she could trace back our family to, I believe, the 1400s.
Wow, that's cool.
It's crazy. So I joke that I'm Viking. I'm a Viking, right? Although I don't have a hat with the horns, but I definitely need one. And the beard's not impressive, but but yeah, I mean, it goes back a long way. Now, granted, Norway's about a country that size, so there's only like 100 people there. So it's
Do you think a true Viking would call you a Viking?
No, I don't think so at all. Can't sail,
Right.
I mean, not to say I don't mind getting in a boat on Lake Erie and hanging out. I'm more of a jet ski kind of a guy than maybe a big boat. But no, I don't think anybody would ever mistake me for a Viking.
So okay, so you grew up in Archibald on a farm. So tell us, how was that growing up? I guess how was it living on a farm?
I mean, it wasn't our full livelihood. It was almost, it started out, at least on my dad's side, as more of a hobby, and kind of grew into, I mean, it developed over some time to a point where my parents still have the chicken farm. The eggs that I brought for you today, those are chickens we were able to get from their chicken farm,
okay.
And move them to Toledo. And
Now they're Toledo chickens.
now they're Toledo chickens. Watch out. Roaming around the mean streets of Toledo, laying eggs. But they're, I don't know. It was all I knew. I had friends that were, I would call proper farmers. Like, that was their family's full livelihood. That's what they did to survive.
Yeah.
My parents had jobs, for other employers when I was growing up, but that definitely contributed to how we sourced food, the family farm.
Yeah.
But it was, we had wood burning stoves in our house. So cutting wood, splitting wood was, that was a normal routine. I hated it. I appreciate it now, right?
Yeah.
And my dad's saying was that, burning wood warms you twice, once when you cut it and once when you burn it.
Yeah.
And I hated hearing him saying that because I knew we were on the whole Saturday was gone. We were going back in the woods to cut down some fallen trees and split them. And, then you do that all year long. You stack that wood and then you burn it when it's cold. And they found this old wood cook stove, which was pretty neat. And they had that in our kitchen. I tell you what, I look at my gas and my electric bill every month and I think, could sure go for a wood burning stove right now, But just things that you would do. One of my jobs in the morning was to get up and take the ashes from the wood burning stove out to the other side of the property, dump them, come back, stoke up the fire, get it nice and warm for, whomever else was going to get up that morning and come out. And, then schoolwork started and then we got to be kids,
Do you think doing those little tasks, do you think back at those tasks and do you think you learned something from them?
Yeah, I think I did. One thing that a lot of my friends or even colleagues, I think is pretty fascinating is my wife and I are very hands-on. We like to remodel our house, or I built a shed out back. And we do everything ourselves. I was like, well, how did you learn to do that? Well, my father actually designed and built our home with his own two hands.
Yeah.
We built every barn that we had on the farm. So you just learn those things. I think back to, I never had my brakes changed or oil changed by a professional until I was, out east. I did it myself, right? Now I look under the hood of my truck and I wouldn't even touch it because it's just one giant computer under that hood. But it was just different back then. So I think it was valuable. It taught me to be, I think, self-reliant, understanding that there's an alternative way to do certain things. So for instance, the heat.
Yeah.
Did we have a furnace in the home? Yep, we absolutely did. But my father hated using it. And he says, well, that cost us money. The wood came from God. That was free. All it cost us was time and sweat.
Right.
So yeah, I think it was a very valuable experience.
So you were mentioning earlier, then you went out to the East, New Jersey.
Yeah.
How old were you and why?
The dirty Jers. Yeah. So I was about 19. I transferred out there to Seton Hall University, which is in North Jersey, very northern side of New Jersey, not far from New York City. So by train, probably 25 minutes from Manhattan to get into Manhattan. I actually attended Northwest State Community College there in Archibald. My mom worked there, and I was able to attend and take classes at no charge. I wanted to get my prerequisites out of the way those first couple years of college, and then I was able to transfer on an academic scholarship to Seton Hall. So I went out there. Seton Hall's in South Orange, New Jersey. So I went out there in 1999, and I moved back to Ohio in about 2007.
What made you pick New Jersey, or what made you go out there?
Seton Hall had a very respectful academic reputation, still does, and the scholarship was very helpful. But I knew I wanted to maybe get away from Northwest Ohio.
Yeah.
We traveled a lot as kids. My parents have or still have land in Alaska.
Oh, really?
Some land in Canada. So we would go take these long summer vacations. So I'd seen other states, but we were very outdoorsy. And so the big city, we never went to big cities. Some families would go to Chicago or,
right.
We did go to Orlando, to Disney. I had an aunt that lived down there, so we'd go visit her. But yeah, I'd never spent any significant amount of time in a large metropolitan area, and I wanted to. So going back and looking at this in reverse, 20-some years, how did I pick Seton Hall? I remember in 1989, Seton Hall played Michigan in the NCAA men's basketball championship. And I remember sitting on my grandmother's farmhouse living room floor. She had one of those massive console TVs, the ones in the wooden box, like the big, And I would spend a lot of time with her. So we were up there, and she goes, well, you can put on whatever you want. So I put on basketball and just listen to them talk about Seton Hall and Jersey. It always stuck with me. And had the opportunity on scholarship to go out there. So
what did it feel like a whole new world when you got out to Jersey?
Oh my gosh. Yeah, I'd never seen anything like that in my life. I mean, didn't even imagine it. So a funny story. I remember getting out there. I was able to move into the dorms early as a transfer. Mm-hmm. So it must have been 2 weeks, 10 days before classes started. So I packed up my Ford Probe and drove out there. And, a Ford Probe's not a large automobile, so space was limited. I was kind of a clothes horse. So I didn't have room for all the essentials, long story short. So I get out there and I started asking people around campus, like, where can I go to pick up, your essentials, shampoo, deodorant, all that stuff, just stock up on it. So, well, I believe it's a Kmart down the road. And so it's just, it's like 2-3 miles away. And I'm like, oh, that's not bad at all. Well, 2-3 miles is like 30 minutes over there. So I get in my car and I had to get on the Garden State Parkway. And that's this pretty large expressway. They have these tolls. Again, I'd never seen anything like this before. They had these baskets. And every so far, you'd have to stop and throw some coins in this basket.
Yeah.
And then, you'd pay your toll and go. So I get on the Garden State Parkway and I get to that first toll and it's like 4 lanes of traffic. And then they merge into like 12 lanes for the tolls. And then you go through and then you got to merge back into like 4 lanes. I'd never seen anything like this. And I was losing my mind. I'm like, what have I done? And people are honking at me because I didn't have the proper etiquette.
Right.
I didn't have the change. First of all, I had to look for the change.
Yeah.
And so I had to find 35 cents. You would have thought that I stole somebody's baby. People were so angry. A lot of 4-letter words were I heard. A lot of middle fingers were flying. And I remember calling my mom like, I don't know. It's crazy. And then when I got to Kmart and growing up as kind of a country boy, I'm walking into the store and there's this senior lady walking in, and I opened the door for her and she grabbed her purse like this. She goes, what the hell do you want? I'm just opening the door for you, ma'am. She goes, well, I didn't ask you to. And she walked in. Now, you take that same scenario in rural Ohio, that's what you're expected to do as a young man. Open the door for a lady.
That's crazy.
It was. And I thought, boy, I don't know. But I adapted and adapted fairly quickly, I would think, or like to think. But ultimately, New York City, one of my first jobs early on was with JP Chase in the banking world. And that was on the Upper East Side of Manhattan. I don't know. My feeling is Manhattan's a person in their 20s. It's perfect for.
Yeah.
So.
How old were you when you started with JP Morgan?
24.
24. Is that how you got into the banking world, or?
So I actually, when I graduated Seton Hall, there was this little pizza eatery, 3rd generation, called Bunny's Pizza. It was right under the train station. And they had this happy hour there where you get draft beer for $1 and free pizza. And so it was fantastic. Everybody from school went there.
Yeah.
And it was Monday through Friday.
Sounds like it would be a place to go.
It was a place to go, yeah. And they were huge Seton Hall fans. I mean, the coaches would go eat there and have dinner with their families and see the players there. I mean, everybody was there. And it's still there. Still owned by the same family, friends of mine. And so I got a job there as a bartender and waiter. And the economy then was a little, I felt like it was a little more depressed with entry-level jobs in the financial services world. So I hadn't found a job yet, but I love bartending. I had a great time doing it. And the train would let out, and folks would come down, have a beer, maybe order some food to go, and then go off to their families. And I met this couple, and she was a vice president at Morgan Stanley, and we would just talk and talk and talk, and then they'd order their food, they'd go. One day she asked me, "What are you doing with yourself?" And I said, "Well, I just graduated and haven't had any success finding beneficial employment in my field." And she says, "Well, kind of give me a little background on, where'd you graduate? What were your degree?" And so she says, "Well, I think I have a job for you." So she ended up helping me find employment at Morgan Stanley. Morgan Stanley Dean-Witter Trust Company, which is in Jersey City, New Jersey. And at least it was until it was kind of rolled into other parts of Morgan Stanley. But that was my first foray into my career, if you will, instead of having just jobs through college.
Yeah.
But I worked there for about around a year and a half before moving over to Chase.
What were you doing at
Call center work. So answering questions on, account balances, helping brokers with trades, working through system issues, going through IRA contribution limits or required withdrawals that folks would have to do.
So you had to learn all of that too.
Yeah.
To be able to. So you learned all that really early on. Just
yeah, I did. Never thought I'd get it. I remember sitting down with a gentleman named Ernesto, still a good friend of mine. They just had a baby, December 20th. She's a sweetie. So Ernesto was kind of a team lead at Morgan Stanley, and they said, "Well, you're going to train with Ernesto." I'd sit down with him, and he'd go through like 7 or 8 different systems to answer one question, and I'm like deer in the headlights. I'm never going to learn this. He's like, just practice, you'll get it. But again, just like anything else that you learn, repetition for me was helpful, and before you know it, they were moving me into different departments, and it was good. It was a good job. It's a good start. Good start into the financial services world.
And then you went to Chase.
I did.
And that was same area, same place?
Yeah, so that was on the Upper East Side. So that was in New York City. Took me about an hour and 45 minutes to commute. All trains. But that was normal, right, out there. Couldn't afford to live in the city.
And this is what, early 2000s?
Yeah.
Yeah.
This is before the Great Recession, if you will. So before the housing bubble burst in 2008. Yeah. So I got in
after or before 9/11?
After 9/11.
After.
But I was out there during 9/11.
Yeah.
Yeah.
How did that affect everything?
Boy, it changed a lot. Just not just culturally, but I think that my wife and I were watching a show the other day called Rescue Me, and it's about New York firefighters, and it's an older show, but there's a picture of them going by World Trade, and there's just this giant hole in the ground, and she goes, "Wow, I can't believe that." I said, I went past that same site every single day that I went to work. That's where the train rolled by, and there was this giant, massive hole in the ground. I remember for a long time afterwards, you might hear a car backfire or a bus, and people would duck because they were still in shock from something that I don't think anybody ever expected to happen.
Right.
I had friends at college whose parents died in the towers.
Man.
So it changed a lot.
Where were you during 9/11? Like where were you working?
I was on campus. I was
campus.
still in college. Yeah.
In college. Yeah.
Yep. We could. Excuse me. I apologize. You could see smoke. We were that close to the city. Not that we could actually see it happening, but a roommate woke me up about 8:30, 8:40, whatever it was, and said, "Hey, you gotta see what's happening. Like somebody flew a plane into the towers." Oddly enough, I want to say it was almost a year to the date that my parents came to visit, and we went on World Trade Center tower, the top of the tower. You could take a tour and go all the way up.
Yeah.
And you go all the way. And these buildings were so massive. If one hasn't been on there, it's hard to put it to scale. But you could look over and you could see the building swaying a little bit in the wind. It was pretty eerie.
Really?
Yeah, it was up there. But yeah, so they had never been to New York City. So they came out to visit, and I said, well, what do you guys want to do? We can do, Statue of Liberty. We can, Ellis Island. We can, it's kind of an all-day thing. But I'm like, we, want to catch a bite to eat and then go up to the World Trade Center, see that. I'm like, yeah, well, let's do that. But that was I want to say that was September 2000.
Oh, wow.
So then fast forward to September 2001, those towers were falling.
Right.
Caused a tremendous amount of stress on my family because they couldn't get in touch with me. That day, all the phone networks went down. They crashed because everyone was calling everyone, right?
Right.
The systems couldn't handle the infrastructure. Cellularly wasn't there to handle that load. So it took a while to get in touch with my mom, which she wasn't thrilled about. I struggled with that for years afterward, because it impacted everyone in different ways. There were some National Guardsmen that came on campus, and they wanted keys to my car. They wanted to search my car, do the thing. Seton Hall was a more densely populated campus that was within vicinity of New York. Matter of fact, Seton Hall is located pretty close to Newark, and Newark has an international airport there.
Yeah.
So,
Why'd they want to search your car?
they just wanted to make sure that there were no other bombs or anything else that could possibly go off. So it wasn't necessarily me. It was anybody who had a vehicle on campus that was registered that they knew about. And I want to say that they sent all the commuters home. So anybody who didn't live on campus, they sent home. Obviously, canceled classes and.
Do you think that's one of those like 9/11? I feel like that's one of those things that like really changed like life.
Yeah.
In general.
Yeah, it did.
Like everybody's like happiness and joy kind of like faded a couple percentages after that happened.
I think there's a level of vulnerability that Americans didn't experience prior to that. Wow, we can get hit. It's possible. Never saw it coming.
Yeah.
There were no warning signs there. That we knew of as a general populace. But I'll tell you the energy in New York definitely died down for a while. But then it also reignited. And you saw people from all areas of life coming together and having a bond that they didn't have prior to that. You saw a newfound respect for FDNY and the NYPD that maybe hadn't been there before,
Right.
Or maybe was re-energized because of what those first responders did that day and on the days that followed. But it was different. Flying became a completely different feeling. There was no excitement there. It was definitely scarier.
I never flew before 9/11. Did you fly before 9/11?
I'd flown a few times.
Was it a lot less strict?
I don't have the best memory of it, but yeah. It was in comparison to afterwards, where you basically had a full cavity search to get on a plane.
Yeah.
Prior to that, I don't remember there being restrictions on, the size of shampoo that you brought with you.
Right.
They kind of had that, like, what was it, 3 fluid ounce rule, which I always forgot about. So they're always confiscating my shampoo or shave gel or whatever it is.
Do you think it's do you think it's like relaxed a little bit, like flying?
I mean, I feel like it has. I think the technology's gotten better as well.
Right.
So I was in an accident, so I had some titanium mesh in my face. This was 2006 that happened. So flying, I for the first year or two, I had to have a card, medical card that said that I had metal in my body because the metal detectors would pick it up. Now they know that that's not, that I'm not holding anything I shouldn't be.
Right.
So I think the technology, not that I'm an expert in air travel, but I think it's gotten better to a point that they can move through quicker.
Yeah.
But yeah. Right after 9/11, you were going to the airport hours and hours early to make sure that you got through your security checkpoint.
Right.
And you couldn't show up 40 minutes or an hour before your flight and expect to make that flight.
Right.
That was not going to happen.
Kind of going back to kind of want to go back to, I know we started talking about 9/11 a little bit, but so working at Chase, how long were you there?
A little after 2008. Wasn't sure if I wanted to continue on the pathway of banking. I'm in commercial banking now, but early on I wasn't. I was I was more on what they call the retail side. I was a licensed banker. So, you'd come in and say, I need to open an account. All right, I'd help you open that account. Or, hey, I have a CD rolling over. I say, okay, what do you want to do with that CD? Do we want to put you in some mutual funds? Do we want to discuss some of those options? So I had securities licenses to make recommendations for purchasing mutual funds, annuities, et cetera. But I just wasn't sure. I didn't really have a strong passion for that. So 2008, I had actually gone back to school for occupational therapy for a time being, before finding my calling on the business side of the banking world, and I haven't looked back since. But
so 2008, when the economy collapsed or whatever, you missed all of that. You weren't in banking at the.
I was there at the beginning of that.
Yeah.
As a matter of fact, I was at Chase when Chase, there's a bank called Washington Mutual, WAMU, one of many banks that shuttered their doors, and the FDIC, or the federal government came in and negotiated the sale of those assets and liabilities to Chase. And one of the last things I remember with Chase was the talking points that we received. So if a Washington Mutual customer would call, here are talking points, well, we don't have your accounts over yet, et cetera, et cetera. But we saw a series of that in banking, and that is the nature of banking, that consolidation. But there were a number of banks that ended up not making it through that 2008 to 2010.
In simple terms, can you explain what happened in 2008, if possible?
So there was just a lot of greed that I think helped start that snowball effect. One of the main things I remember, making referrals over to my mortgage officer, and I'd say, hey, so and so has a mortgage at Fifth Third Bank, say. They also have a lot of credit card debt that they could probably, use some help with. And they also mentioned getting some cash out for some renovations to the house. So I'd refer it over and say, okay, well, we take a look at, what they need versus what their house might be valued at. Well, we can't get you all that money. However, if we had a higher valuation, we can definitely get you the loan that you're requesting. And
A higher valuation of the house. Yeah.
Right. And so you'd see maybe some inflated valuations. And without making too many accusations, there could have been some collusion between the appraisal industry and the banking industry. I know for a fact that I had a mortgage officer who was college roommates with the guy that owned the appraisal company, right? So if you're just an arm's length away and you need to hit $400,000 value in order to get the deal done,
Right.
and the house comes back at 380,000, how easy is it to pick up that phone and call your buddy and say, hey, it's just $20,000 more,
Right.
you know, and buy a bottle of bourbon kind of thing. And so there was some of that.
So it was loaning to people who were already very much so in debt.
There was a lot of that.
Yeah.
That's for sure. There were some products that came out that, you know, looking back, I even pushed back when I was at Chase, but they had a home equity line of credit. And this is a product that you could put on your home. You could think of it as a credit card, if you will. Works a little bit differently. We won't get into the details of that. Matter of fact, they issued cards so that you could actually take that to Macy's and buy, and you were using the equity in your home to finance debt. Historically speaking, things like that had never been done. But say your house is, let's go back to that number, $400,000. There's a limit up to that $400,000 that a bank is going to be willing to lend. We call that loan to value. So the size of the loan we're issuing versus the value of the property or collateral that we're issuing a loan against. Banks at that point in time had decided, well, if we're able to go up to 90% or 95% of what the home's valued at, we can go up to 125% of what the home's valued at. Think about that.
Right.
So now you have more debt or potentially more debt on your home than the home could sell for in the open market.
Yeah.
There were a lot of products out there at that point in time. So folks were getting underwater. That's what we call it in the industry is, you know, your loan is underwater, meaning that whatever we're placing the loan against, that collateral isn't worth what you owe on it. We see that in certain aspects of lending all the time, things that depreciate quickly, like vehicles, right? In my day, like when I first got started in banking, we didn't have 8-year car loans. It didn't exist. Cars depreciate so much faster. They're never going to value out 8 years later at, you know, let's say somebody defaults halfway through that loan, we're probably losing some money on that. But we saw that a lot in the homes. There were other programs there was something called a ninja loan, which is no income verification, no job verification. So literally a person could walk in and say, I have a job. I make $500,000 a year. I want to buy that $1 million home. But maybe they were a part-time baker, like I
Right.
you know, I don't, but clearly not making. There were no verification requirements.
And they were just handing out money just like that.
Yeah, and they were just handing out money like that.
Do you think a lot of people, I know a lot of people lost money in '08. Do you think a lot of people got away with like scamming and like keeping?
Oh yeah,
Yeah.
there's always going to be scamming out there. I read something a couple days ago that the federal government. This is, you know, I don't know how factual this is. This is on a financial group that I follow on Twitter or X, but said that the federal government loses $1.5 trillion a year due to fraud. It's always been that way. And it's probably always going to be that way. If there's something good that the government may provide, there's going to be somebody that is going to find a way to defraud
Right.
and take that money. That's
So-
just human beings, though, right?
Right.
Yeah.
What do you think, like, what was like, I guess, did you see like the economy collapsing before it happened? Or did it catch you by surprise?
Caught a lot of people by surprise,
Yeah.
including me. Didn't catch Michael Burry by surprise, though.
Who's that?
He's a financial guru. You can look him up, but matter of fact, there's a movie that came out a number of years ago called The Big Short, and it was about kind of that whole situation. There's another good one called Margin Call that talks about some things that led up to that, but The Big Short certainly does. Michael Burry is a real person, but he was played by Christian Bale in that movie, and he just was looking at all these numbers, genius, at least when it comes to analysis, and he just saw it. He says, "Hey, let's short the housing market," and people are like, "Are you crazy? It's booming," and he's like, "Is it though? We think it is, but just wait." So he saw it coming. Outside of that, I don't know how many people did.
Huh.
And he made a lot of money off it.
That's crazy.
It is crazy. But when I look back though, in retrospect, all the things that banks were doing, knowing what I know now about the banking industry, and how important it is that we verify, we trust but verify. So if somebody says I make $500,000 a year, okay, but we're going to verify it.
Yeah.
Right. Someone says, well, I have $1 million in liquid assets. Okay, we're going to verify that before we can close that loan. Banks weren't doing that then. They just weren't. There was also a perfect storm coming too. There's a lot of adjustable rate mortgages. So the assumption was that, let's say a young couple out of college, they get married or not, but they want to start a home together. They're going to start having kids. Okay, you're making combined $100,000 now, but in 5 to 7 years, based off of you're getting promoted and wage increases year over year, you're going to be making $300,000. So we're going to put you in an interest-only mortgage. So your monthly payment is just based off of whatever the interest that has accrued, or there's a couple of ways that they would set those up, but it was a much smaller payment than when the principal and interest payments became due 3, 5, 7 years later.
Yeah.
A lot of things kind of spiraled out of I want to say out of control, but a lot of things happened in our economy where folks just weren't making that level of income that they thought that they might. Mm-hmm. And so when those mortgages adjusted, their payments tripled or quadrupled.
Oh, wow.
5, 6 times even. And of course, they couldn't afford those payments. Now, mind you, since they were on interest-only payments for those first number of years, they weren't paying down the principal of that loan.
Right.
You compound that with the fact that they probably had an overvaluation on the home to get into it in the first place. So it wasn't worth what it should have been worth 7 years, 5 years, 3 years later. So when the bank took that house back because they stopped making payments, the bank was stuck with a house, that just wasn't worth the debt that they had issued on it. Mm. And when, one or two of those happens in a bank, fine. But when you have 10,000 of them,
the bank collapses.
Yeah, they call that toxic debt. So that it's debt to a bank is an asset, right? So person to person, a loan is a liability to us. We have to pay that loan back, right? So that's a liability on our personal balance sheet, if you will. Our cash as men, as people, that's an asset because we can take that cash whenever we want and go use it to purchase something.
Yeah.
With a bank, that's flipped. The cash is actually a liability because I have to give that back to my depositors. So say, for instance, I have somebody walk in and say, I want to put $1 million on deposit with you. That's great for the bank for now, but we have to give that money back to them at some point when they demand that money back.
Right.
A loan is money we've given them that they have to pay us back. That being said, those are assets, but if you can't do anything with it, right? We as banks can sell debt to one another, just like I could sell you my truck. That's my assets paid off. I can sell it to you if I want to. Banks do the same thing with loans. They'll bundle those up and they'll sell it to other institutions. Well, that's all well and good if somebody wants to buy that. And so one of the tenets of business that I have and that I teach my client base is that cash is more valuable than equity in almost every market. And the reason being is cash you can pull at any point in time, but equity, you can only pull money out of that if someone's willing to lend it to you. So Look what happened in 2008. In 2009, 10, 11, and so forth. For many years, it was difficult to access money or dip into the equity that you have on an asset you own, like a home or a second home or a vacation home or an investment property. Banks were a little more restrictive of that. And so somebody could have their back against the wall and need to access that money, and they can't because somebody doesn't want to lend to it. If that money were in cash in an account, they could just walk in the bank, get a cashier's check.
Right.
They get $100 bills. So, where's the value there? Well, I say having access to it where nobody can turn you away, that's more valuable than having to ask permission to tap into the equity of an asset that you own. Because that's essentially what you do when you put in a loan application, is you're asking a lender, maybe permission's not the correct word, but that's really what it is. You're saying, would you lend me the money? Here's the collateral. Mm-hmm. How much money can I get out of that? What are the terms? What are the interest rates? What are the monthly payments, et cetera, et cetera.
Kind of going back to like the '08, the collapse in '08, and when you look at everything happening now, it feels like since COVID, things have doubled in price easily, maybe tripled. Do you think we're in a recession? Do you think banks are doing similar things?
I see some banks, becoming a little more restrictive. I wouldn't say in any way, not even close to comparison to what I saw in true recessions, like the Great Recession, from '08 to, whatever end date one wants to put on that, where lending was much more restrictive. Every bank has its comfort zone. Mm-hmm. Their sweet spot on the bat, if you will. That's another conversation that I have with folks that are interested in talking about it, is not every bank is going to offer the same type of loans. Like investment real estate, for instance. There are large institutions here locally that won't do it. And so an investor could walk into their bank where they've done business for years and say, I'm going to buy this property downtown. Cost is $1 million. I'm going to put half down. I need to borrow $500,000. And there's certain banks that'll say, no, we're not interested in that. We don't offer that product.
Why?
It's just not in their credit appetite. There's a higher risk rating on those types of properties than, say, a primary residence. Mm-hmm. I think the mentality there is that a person is more inclined to default on an investment loan than their primary residence. The reason being is that's where they live.
Right.
It's where they raise their children. It has a lesser threshold, your primary home, of default than typically what you might see in like the investment real estate world. Some banks very much like investment real estate. We do at First Federal Lakewood. It's a product that I have conversations with constantly. As a matter of fact, every week I receive a phone call from somebody looking to buy either a commercial property like the space that we're sitting in, or a residential where people live, whether that's a fourplex or a 20-unit apartment complex. I've
that's something that you've really for me personally, you've just kind of opened my eyes on, is just the commercial lending process. Because me, I've always just been like against that personally, but I'm more open to it once you kind of understand the numbers a little bit better. We were just talking earlier about a building, and it's kind of exciting. It's like, I don't know. It's like,
especially when you look at some of the neighborhoods around here, and where they've come from over the last 15 to 20 years. There's a lot happening in downtown Toledo, which is exciting. There's, I think, a renewed electricity here than there used to be. And to be a part of that is exciting. Mm-hmm. And I was just, I don't know, have you been down to Toledo Pickle?
I have not.
You should take the family down there. That's a really neat facility, and they have a partnership with Toledo Metro Parks, and they'll talk to you all about that. I had the pleasure of taking a tour and getting to see that facility and talking to somebody that worked at Metro Parks, and it was really neat. That whole area down there, Ostrich Town, and the things that they've done to bring that back and revive the real estate. So yeah, I know exactly what you mean. I agree. It is exciting.
So like I never started out with a loan or anything. I kind of just did it on my own, right? But like if someone was out there and wanted to start a business and was looking to get a loan to start a business, or I guess what's the process like? What do you recommend? Can they even get a loan if they start a business? Like if they're just like, okay, I'm gonna, because online you see all these like super easy, like start a LLC, get a loan. You know what I mean? Like,
Right.
like can you debunk or tell us what's real and what's not about that? Like,
Yeah. Actually, I love startups. Excuse me. Usually because, in my experience, I should say, the passion in a person's eyes when they're talking about that thing that they want to build. I don't know. It was always a special time. I used to, and I should get back to it, but at the Toledo Public Libraries, they would have like these business incubator courses where folks from the community can go and learn about how, the process of starting up a business from scratch. It's very difficult. It's not that easy. And so there's websites that you've heard the saying, if it sounds too good to be true,
right,
it usually is. Well, so when you see those websites, or when a person who wants to start a business, a future business owner sees that, they should approach it with some skepticism,
right?
Because you don't know what the other person on the side of that website's intentions are. Could it be, fill out this application so I can get your social security number, your date of birth, your driver's license, your bank account information? You have to put all that in a loan application. Yeah, there's potential for that. And working in the banking industry for over 20 years, I've seen fraud. But let's not go down that path yet. I would say the first thing is develop. When you start with your idea, right? Say it could be a food truck. Well, let's understand the cash flow on that.
Yeah.
Right. So start writing projections on it. Right. Well, what does it cost to buy a truck? Right. What does it cost to outfit that truck? What does it cost to buy the food? Well, how often do you have to change the oil and the fry pans in the truck itself? Where are you going to look for clients,
right,
or patrons? Are you going to park the truck, at a park? Are you allowed to? Like, there's all these things that, once you start that business plan.
So banks want a business plan.
A lot of them do.
Okay.
And even if the bank doesn't require it, I would think that a business owner or a potential business owner would want to have at least a pretty good idea of all the things that's going to approach them. Because when I did startups, and I don't offer startup lending now necessarily, there's some one-offs. But first thing I would ask the borrower is, how much money do you want to borrow? I want to borrow $500,000. Where did you get that number from? I don't know, it just seemed like a pretty good number. Well, it's not what a banker wants to hear. Like, well, how did you get there? All right. So, well, here's the cost of everything that I need to get off the ground and running, plus some working capital until I can attract enough customers to become self-sufficient. So the business plan should talk about 5 P's. Let's see if I can remember them. People, right? So who's involved?
So these are the 5 P's of the business plan.
5 P's of the business plan.
Okay.
So people, like, so who's going to be working in there? Like, who are the people of the business? You have a receptionist, you have a hairstylist. How many hairstylists do you need? You know, whatever the business is, who are the people that are in it? The place, where's it going to be located? Promotion, how are your potential customers going to hear about you? Pricing, what are you going to charge for your product or service? And how did you come to that number? That's something that takes a lot of thought. So if I have this can of Coke, what do I need to charge for that can of Coke? How much did the aluminum cost? How much did the paint cost? How much did the ingredients cost?
Right.
How much does shipping cost? All of that. You know, my licensing from the FDA. What are the costs in that? So the pricing is a very difficult one because then you got to make a profit,
Right.
right? Because none of us.
Is that the last P?
No. But I was trying to.
That's a
buy
good
time
P.
because I couldn't remember the last P.
So you said
product. What are you selling?
product.
Yeah. What are you selling?
So people,
People, place, promotion, pricing, product. Yeah.
profit should be added on.
Profit. We can do the 6 Ps, right? Well, pricing though, pricing
I guess
should roll into that profit because then there's something else, another P called projections. And this is something else that I recommend and this goes into that business plan. It could be an addendum to the business plan, but should be part of it, which is how much money, do I need for the first 3 years of operations from the very first month to month 36. When do you as a business owner start making money?
Right.
Because you still, as a business owner, you have a mortgage to pay, a car payment, insurance, et cetera, et cetera.
Right.
You got to support yourself and your family, right? So I would say definitely understand every aspect. Competition. How many food trucks are out there?
Right.
Right. They do a neat thing down here during the summer on Thursdays. I can't remember what street. Is it
Thirsty
Promenade Park?
Thursday?
Yeah, right. That's every Thursday, regardless of the season. But it's down here at Promedica. I think it's Promenade Park, and they kind of cordon off some street. There's just a bunch of food trucks there. There's usually live music, and all the folks who work downtown will traverse over and pick something up. When I worked at PNC in the building, it was right outside of our building. I loved that Thursday because there was food trucks that just came to you. You basically had to get off your butt and walk downstairs. You get some of the best food in the city.
Yeah.
But again, there were 9 food trucks out there, right? Each one provides competition to the other one. So you could have the best donuts in town, but if there's 9 other mobile donut makers, how do you stand out?
Do you think understanding those 5 Ps prevents a business from failing?
No, it doesn't prevent it, but just like running a race, getting off to the best start possible is very helpful. You can lose that race, but it's very helpful to just have that level of understanding.
That's discouraging. You're still going to lose, but it was helpful.
You could lose, right? But no, it doesn't prevent it. There are no preventions for a failing business. Sometimes it's luck.
Yeah.
Hard work, definitely.
Right.
I mean, I think some business owners who or potential business owners, folks who I had conversations with about starting their business, they weren't quite there yet.
Yeah.
Right. A business owner will come to a bank with the rosiest of scenarios. This is going to work out great. Banks approach it with the worst intentions in mind, right? So just like an actuary who sets your life insurance policy premiums, they're not assuming that a 30-year-old man's going to live to 90 and have no health concerns their entire life.
Right.
They're going to look at the raw data and say, hey, the likelihood is, based off these factors, you may not make it past 70.
Yeah.
And we're going to set your premiums at that. So the banks do the same thing. They say, well, what's the likelihood of to fail? we call that a probability of default. So what's the probability that this specific business venture is not going to make it through? So going back to the restaurants are very difficult
to fund. Or
to fund, yeah. But
I know the industry in general is.
Yeah, the industry in
I've
general.
heard is
Just to get through the first 3 years.
Yeah.
Most fail in that. I want to say it's 12 months, if memory serves me correctly. But definitely in those first 3 years, most of them do fail. And again, why? Is it because the food's not good? I mean, maybe for some of them, but probably not. There's just a lot of factors that go into it. Restaurant business is a tough business.
Are there certain industries or industries that banks look at and they're like, nope, red flag, not funding that one?
Right, we just went through it, coming out of it, but the marijuana industry, for a multitude of reasons, right? Now, some of that was regulatory; it's not federally regulated. There are banks who are now offering financing or even bank accounts. Believe it or not, there are industries that banks won't even allow you to open a bank account for to put money into.
Oh, wow.
Marijuana was one. I worked for an institution here locally that I had somebody who had CBD products. Did very well. Had a couple of websites, did some distribution, and on one page of his website, he had a hemp leaf or a marijuana leaf. Even though it was CBD oil and CBD products, I received a call from our loss prevention and said, we're closing all of his accounts down unless he removes that marijuana leaf.
Oh, wow. On the website?
On the website, yeah. Banks have access to a lot of information. This is kind of interesting. They can look at the industry type that a business owner states that they have, and then look at the type of transactions coming in and out of their accounts and have a pretty good idea whether or not it's legitimate business. So, for instance, let's say, somebody is a dog groomer, and they're making $50,000 cash deposits every week. Okay. It must be a very good dog groomer with a client list up the wazoo. But we will look at that and run the statistics and say, well, the dog grooming industry, 78% of the transactions are credit card, not cash. And in this specific customer, 100% of their transactions are cash. Now, could they just not accept credit card? Yeah, it's possible, but not probable. And, again, that's a massive amount of cash coming in.
Yeah.
So, banks can look at that and have a better understanding if it's a legitimate operating business.
Is that reported to the feds?
Not necessarily.
No.
I mean, the banks, to my knowledge, the banks don't, just pick up the phone and
this is weird.
Hey, you might want to look at Kevin's taxes. Might be underreporting some income. Just kidding. No, we don't. Not necessarily. I mean, there are, and I can't get into this. I'm not allowed to get into this too much into detail without getting into some trouble. But there are a lot of regulations out there that banks are required to communicate in certain circumstances. Mm-hmm. But outside of that, we still have to protect our customers' privacy.
Right.
Okay. So bank privacy is a very important aspect of banking, keeping my client's information secret.
Personal
it's personal. I can't go out and blab that around town. At least I shouldn't be.
Right.
But the same is true whether it's the IRS or, are there one-offs? Absolutely. There always are. Yeah. But we have to also protect the institution itself, the bank, right? So we look at that.
So if you see a dog grooming business, they're making $50,000 profit a month, it's a red flag. But the numbers look good. You still wouldn't loan that money to that dog grooming business. if you're like, this is a little fishy, I don't know what they're doing?
I think the first thing I would do is take my dog there and see if there's a line of people standing around the block waiting to get in. Because they could legitimately have that level of customers.
Yeah.
Or could be operating in a very affluent area where they're charging an extreme premium. That it could be 100% legitimate. But does it make me go, Yeah, it does. So I think the first thing as a bank officer, not that I do this daily, I don't want to scare off any potential future customers that I'm going to, that I'm a part of the investigative team. I'm not, but they're, especially at large institutions. I mean, big ones like Chase is massive. They have an entire division of people that do this all day long.
Yeah.
They might send somebody out. They may send one of their local lenders or bankers an email and say, hey, we need you to do a site visit to just make sure that they're still operating out of that location, and then report back your findings. And then they have someone investigate that and say, okay, well, Dan was out there, or a banker went out there and said the parking lot was empty and the place was boarded up. So how are they still doing business?
Right.
Call your customer. Where's their base of operations at? Because it's clearly not at 123 Main Street.
Yeah. Insurance companies do that.
Insurance companies do it.
Yeah.
Absolutely.
They check mine out. They're like, what's Kevin doing over here?
Yeah. not gonna go there. But no, I think that's the responsible thing for an institution like an insurance company or a bank to do. But not to get off track, but going back to that startup, and how we got this far. But the startup, the true startup, starting from scratch, is the most difficult part of almost any business in a business life cycle. That startup. I mean, it's difficult. It's really hard to do, and I think there's so many unknowns that come at a young business in its infantile state. Any one bad thing can sink that ship.
Yeah.
Right. If you're a landscaper and a couple guys get into a truck accident, that can wreck a company if they're not well established. No pun intended. That it would wreck a company, but yeah.
I've got a couple of I've actually been writing down a couple of questions that some are short answers, some are long. So, but like, what are some common myths, or mistakes people make with banks?
Number one, be completely honest. So when a borrower fills out a loan application, I had a client that I had to have the breakup call. I couldn't lend to them. There's something called a personal financial statement that everyone fills out for a commercial loan. And this person had checked that they never had a bankruptcy. And they also checked off there was something with a DUI, if my memory serves me correctly. It didn't matter. They checked off they never had a bankruptcy. Now they had one, but it was 15 years ago. They said, well, I thought it fell off my credit report in 7 years. You have to read the fine print, because I believe there on that specific form it says, have you ever filed for bankruptcy?
Yeah.
And they put no. Now, a lot of those forms have changed to where they will ask, have you filed for bankruptcy in the last 7 years? So if it was 8 years ago, you could check no off that. And that wouldn't be a reason for decline. Folks may ask, well, okay, maybe they just forgot about it. Well, he didn't.
Right.
He knew about it. He told me about it. A bank can look at that as a character issue. So the 5 C's of credit, character is one of them, right? So
wait, what are those 5 C's of credit?
Yeah, I knew you were going to ask me that.
But I want to get back to bankruptcy after you tell me that, because I've got to have a question about bankruptcy.
Well, the bankruptcy thing is not usually an issue. There's some, it can be, but there's some ways to work around that. Number one is the age of it. Okay. How long ago did you file it? Are we concerned on something 10 years ago? Well, what's the story behind it? Well, divorce is a big one. A lot of people file bankruptcy going through or after divorce for various reasons. Makes sense.
So filing for bankruptcy doesn't necessarily affect you, 15, 20 years down the road.
Not necessarily, no.
Yeah.
Now, reestablishing credit is also something that's very important. And one might ask, well, wait a minute. If I filed for bankruptcy and now I can't get a loan, well, there's certain types of lending that are more forgiving, like a car loan. Car loans are a little bit more forgiving than a commercial loan to start a business.
Right.
When you're in that startup mode and you're looking for funding from a lender, expect to be under a microscope, because they just want to make sure that they've eliminated any potential pitfalls at the beginning of the process. I saw somebody one time get declined because they had gambling winnings on their tax returns. The lender at that point in time, it actually
Winnings or losses?
winnings, because winnings eventually can become losses.
Right.
And the fact that they were reported year over year over year, sometimes, because I don't think you can report losses on your taxes, but they know that there's obviously a desire to hit the casinos, and that can scare a bank off, especially in a startup.
Kind of going back to what you said, 5 C's of credit, characters.
Character's a big one. Yeah. Character's huge. That's kind of the wild card.
So will you explain to me what the 5 C's of credit is?
Boy, we're gonna have to look them up, because I got to be honest, I don't.
But what
remember.
like, is that what banks look at? Is that what, like?
No, these are just kind of like cheat sheets. Like, think about these things.
I'm looking it up.
Obviously, cash is one. So how much liquidity do you have? Here's a myth.
You want me to tell you? I googled. Okay.
Let me see if I can. Is cash one of them?
Capital.
Capital.
Yeah.
Credit score. Right. So your credit.
Nope.
Character.
Yep. Character, capital.
Collateral.
Yes.
Hit me with the last two.
Capacity
Yep.
and conditions.
Yeah. Yep. So here's a myth.
So this is how they assess loan risk: character, capacity, capital, collateral, conditions. We learned the 5 P's and the 5 C's. This is nice.
Yeah. Wish I'd have done a little bit more studying before I came on. There's a time, and the character, going back to the character, that's a big one.
Yeah.
Right. I've seen folks who have had felonies before that were declined by certain institutions because of that. They considered that a character issue. It could be a lot of things could have happened. My opinion. Let's hear the narrative or the story behind it.
Yeah.
And just have a conversation and figure out if it's something we can get by. I've had clients that were declined at other banks because of DUIs. Again, character.
When you say your opinion, are you saying your opinion as like a and I don't want to say that First Federal Lakewood is a smaller bank, but like more of a community bank versus like a big corporation. Like a big corporation they'd just be like DUI, nope. Or and when you say you're saying like, is that mostly how smaller banks work, or is that just you personally actually?
No, I think every lending institution has at some level a policy or at least a guideline around character issues.
Yeah.
Right. So with some, especially bigger institutions, so First Federal Lakewood, are we a community bank? Yeah, we're largest community bank in Ohio. we'll look at something and we'll want to know, instead of what we would call like the auto decline, big institutions, DUI came back on their background check, automatically declined. No ifs, ands, or buts. Didn't matter. Don't want to hear the story. We don't care. We don't care how long ago it was. It's on your background check. It's over.
Yeah.
They go to a community bank. The community bank says, okay, what happened? Well, I was out New Year's Eve. I had 4 beers. Probably should have had 3. And yeah. And, I went into, counseling for whatever the story is.
Right.
Okay. How long ago was that? I was, 1994. Okay. We can probably get by that.
Right.
5 of them, probably not going to get by that. Right. But, and just to push this back into the startup, yeah, those things are going to be scrutinized. They're going to be looked at. The capital, that's a big one, right? The banks, there's this myth that, well, banks only want to lend to people who have money. Well, that's not necessarily true. But what happens if and when something happens in your business? Because something always does.
Right.
You're a business owner, right? Is every day roses and sunshine?
Nope.
No, it's not. It rains. And what happens if it starts pouring? Do you have backup to lean on? Or are you going to have to borrow more money from an institution?
Right.
So, is that a nail in the coffin, so to speak, to a startup? Not necessarily. And there are grants and government programs out there, but just, from a banking perspective, just brass tacks, it is good to have savings. And I know that can be difficult for some folks who are looking to start their business to get out, of the situation that they've been in. And they say, hey, I have this great idea. I know how to make the best donut in the world, and it's going to fly off the shelves. Okay, but with only debt and no capital behind you, and now you're asking for more debt, it could be tough for a lender to get comfortable there.
Right.
Might not. It's very situational.
And while we're talking about saving, whether it's saving personally or saving as in, saving it in a business, what are the first concrete steps you tell someone to do to protect themselves in this economy?
Well, individual or personalized cash flows is obviously very important. If I were counseling someone, and this isn't necessarily something I do in my day job, but if I'm having a coffee with somebody and they're like, I'm just really having trouble getting this off the ground. Okay, well, what are the reasons for decline? A lender declines you, they're going to tell you why. They're obligated to tell you why they're declining you. Well, it keeps coming back that I don't have capital. That on that fifth C or that third C of credit, every time. Okay, so what do you do for a living? Okay, well, I make $100,000 a year. Okay, let's take a look at some things. All right, you got to tighten the belt here, right? Because maybe you're 3 years out from getting that startup off the ground because a person needs to take care of, that borrower needs to take care of some things that are happening in their daily life. This could be the toughest thing. Do we need a $7 Starbucks every morning? Probably not. Right. Take a look at, how you're attacking some of your debt. Well, I've got $50,000 of credit card debt. Okay, well, what are your required monthly payments? And we look at those. All right, well, you only owe $400 on this credit card over here, but you're only making a $29 payment. And you're putting an extra $300 a month on this credit card. Why? What's the bigger balance with the higher interest rate? Well, let's just pay this little one off, and that frees up that extra $29 a month, and then you move on to the next one. So attack it systematically.
Right.
And that will help you pay that debt off faster. Because to be honest, that's another thing a bank's going to look at is how much debt does a person owe? And now they're asking for more.
I think it's wild how people, to me, it seems logical. I do that, but I just always thought it was logical to do that. Sometimes I'm surprised at how many people don't do it.
With just monitoring their cash flow?
That and looking at if you owe somebody here, you have a certain interest here, and then you owe money here, and interest is less, like they'll pay the lesser interest first. And like, if you just do the numbers, you could see. I don't know, like you know what you got to pay first.
Yeah, and eliminating some of those debts as quickly as possible. You know, and being the sole provider of a family of 5, like it's amazing how quickly the money goes, right? And just little things like I'll get the Amazon bill. I'm like, how on earth did we spend that much money on Amazon? It's so easy now. It's hard to correct those habits. You know, I'll change the password on the Amazon account so nobody can use it. You know, but it's not like it just isn't the same as it was 20 years ago, where you know, there was no DoorDash. There weren't all these ways to, I think, I don't know, maybe I'm looking at it naively, but the ability to spend money, how quickly all that goes. I remember watching my mom add up the checks, which is funny. I became a banker, and she gives me a hard time about this all the time. But I would ask for something. She would say, "Well, we don't have money for that right now." I said, "What do you mean you don't have money for it? There are a whole bunch of checks in the checkbook." She's like, "Just because we have checks doesn't mean that there's any money there, right?" But now it's just so easy to. I think one thing that I would like to see more of is folks actually sitting down and looking at their monthly budgets. You know, if you make $700 a week, don't spend $900.
Right.
Okay. Well, that's not so easy, Dan. Well, look at where you're spending your money at. Because I bet there's a lot going out that doesn't need to.
I had a friend who was telling me how he was struggling financially and, you know, makes good money. And I was like, well, look at, same thing. I told him the same thing. Look at what you're spending your money on. Came back like a week later. He's like, I spend like $1,000 on DoorDash a week. I'm like,
yeah.
I'm like, well, there it is.
It's easy to do. Well, going back to the post-hosting Christmas habit. Well, you know, after we've hosted Christmas for all those relatives and cooked all that food, yes, we have leftovers, but it just doesn't sound as good as a nachos Bel Grande from Taco Bell. You know, I could dial up. So we look, we ordered some Chinese food after Christmas. We did, you know, like, and we had a few days in a row where we ordered some DoorDash. It's easier to do than it sounds like. Well, that's a simple one. It's not, especially if you're a busy person, and by the time you get home, you're like, man, I'm starving. I just don't have the energy to cook a full meal, but I can order one.
How has and I'm gonna wrap up here with some closing questions. We only have 15 minutes on the cameras left. So, but when you look at AI, how has AI affected the banking world as far as accessing capital or just in general? Like,
you know, we've been looking at these algorithms for a long time, you know, based off of the inputs from an applicant or a borrower. And you can kind of design, and we've been doing this for a long time, designing these systems to help kind of expedite a process. So lending under X amount of dollars. Hey, I want to borrow $50,000. Okay, we have an online application that can help get you qualified. It's going to look at your credit score. It's going to look at all these different things. So we're constantly looking at, you know, how to better our processes for not just the bank's economic profitability, but also a better customer experience. Worst thing in the world is waiting on that answer from your banker.
yeah,
Hey, am I approved? All right, it's going through the process. Like there's, so we're utilizing AI now to kind of help screen certain things. I mean, it's been used for, you know, fraud prevention for a long time. That's a big one. But you know, we're looking at it as institutions on refining our processes. But I got to be honest, there's a lot. I had this question come up the other day, like, are you worried about your job in the next 10 years because of AI? I don't think so. Not yet. There's a lot with commercial lending. There's a lot of questions that need to be asked. There's a lot that one needs to understand. And when you're lending to businesses, it's not always as simple, I should say, as the black and white numbers on paper. Like, we live in the gray in our lives.
Right.
Not everything, most things in our life are not just simple black and white.
Right.
There's a lot of gray there. Well, we have to understand that middle ground. Is this a risk that we have an appetite for? Is it not? To just design a system to do that for an institution is difficult. So I don't know if I just don't know when they get there. I think one thing that we are seeing, one of the reasons I came to a smaller community-oriented institution, is we're seeing a resurgence of consumers who have a desire to be treated like human beings and real people.
Right.
Okay. So I think a bank can do quite well by just excelling at customer service and truly excelling at customer service, which I want to say we do well at First Federal Lakewood. It was one of the things I didn't believe when they recruited me.
Honestly, I feel like that's one of the mistakes that I made when I first started my business. Is I just like any other typical person, right? I just went straight to a big bank, opened a bank account, and I never really built that relationship with banks, with the bank. And if you looked at it all the way around, people that I was meeting, homeowners, other businessmen, I was building those relationships. But with my bank, I wasn't. It was like the forgotten child,
right?
And I remember I was trying to get a loan, and they just declined it. I'm like, I've been with you guys 5-6 years. Like, what the heck?
Yeah.
You guys see the activity every single month. You guys can look at whatever. And that's where I was like, that's when, I met you, and I was like, I need to get in with a relationship type of bank. Because it's just, that's the only area where I was lacking.
How's that been?
Way better.
Shameless
Yeah,
plug.
way better. And and I had been told by a couple of people, no, you got to go to this bank or go to this bank. Just smaller banks, right? Like more relationship based. But I was so busy working on the business and stuff, I never gave myself the time. But I think it's those decisions I'm feeling now, because I'm like, man, if I would have done this a couple of years ago, maybe I would have even been in a better financial position.
It could be. I'm going to tell you that is a question I get. Do relationships matter? They absolutely do in banking. We could look at two identical loan applications. One of them is a customer at another bank who we have no history with, that we don't know. And another one is a person that's been a customer of ours for 10 years, who's had loans, paid them back, had loans, paid them back. We're going to approve this one, the current customer, at a greater chance or likelihood than somebody we don't know, all things being equal, everything else. That is true. And I've seen that. I think the larger the institution gets, the more,
black and white maybe.
The more black and white it certainly does get. I was going to say the more that the outcome of the credit decision, so the decline or the approval, it's more hinged on, how much money's in that bank. What's their credit score? For instance, credit score is another one. Every bank has some form of a policy or guideline that they have a credit threshold where they'll say, well, if their credit is under 650, we're not lending to them. If it's under 6, that has been very true of every single large institution that I've worked for. This is my fourth bank in 23 years, so it's not like I've jumped around all over the place. But the three previous ones were larger institutions, and yeah, very much so. Oh, that's a 619 credit score. Our cutoff is 620. Nothing we can do for them. They can reapply when they have a 620. Where at First Federal Lakewood, I've had it where, okay, we've had an applicant whose credit score fell below our comfort level, our policy, our guideline, if you will. And yet I just had a conversation with him about what happened. Well, what happened with this, this credit card that you have that is reporting 15 lates? Oh, let's just get the story behind it. And I've had those turn into approvals where I knew at previous employers of mine that would have been a decline, and there's nothing I could have done to sway the bank over to approving that loan for that customer. So that's, I think, the power of a community-oriented bank is that they do want to invest in the community. We still have to make a profit, right? So we do have to mitigate our risk out, and we do worry about defaults. That's our biggest fear is that we're going to loan a substantial amount of money and it won't get paid back. Another myth is, well, you have that piece of real estate. I had, you have that. Well, let me go back to that thought. You have that piece of real estate, and it's worth, $100,000 more than I borrowed off of it. Yeah, okay. But that's not our business. Our business is not in reclaiming property and then going out and auctioning it off.
Right.
There are fees and costs in that too. By the way, just to get through the legal process of a foreclosure is extremely expensive to a lender. It costs us a lot of money to do that, and we don't want to. And then how often, I mean, we don't want to get a reputation, and no bank does, of being the bank that takes people's homes or cars, or we don't want to repossess. Our goal is to make sure that everybody involved in the process is comfortable so that we don't get to a default, or at least we've done everything we could to really look at all the details of that loan application, because we don't want to take somebody's property. We really don't.
What would you tell someone that's out there listening right now about a commercial, a startup funding, funding startup loan, or a commercial loan to get into the commercial real estate? What advice would you give them as far as I guess I'll just do that. I'll just say that. What advice would you give them?
So with the startup, like a true operating business startup, do as much research as you possibly can. I mean, research to the nth degree. If you're starting a restaurant, go visit other restaurants, look at their pricing, look at their menus, look at, when they start releasing cooks, when the rush dies down, or all that. Just do as much research on your competition, on the costs. Don't give up. If you have a dream, if you have a passion, you're going to get no's. At a startup, you're going to get more no's than yeses. So don't let that discourage you. Yeah. Believe in yourself. And seek guidance from those folks of us who have been doing this all of our adult life. Not necessarily that we're going to come with a bag of cash to make that dream come true, but we may be able to provide some very valuable insights.
Yeah.
To help you you realize that dream. But then from the commercial setting, like an investment, somebody who wants to get into investment real estate is,
when you give that advice, give it to me, because I'm getting into it. So what advice would you give me?
Well, you're not a startup.
Well, not as a startup. Just someone think about it. Like, for example, like me, right? Like, I don't have, besides my mortgage, I don't have like debt. But I want to expand, and I'm like, commercial real estate is what I want to get into. So I'm baby stepping my way into it. What advice would you give me?
You personally, I would say, don't be afraid of debt. I mean, look at the billionaires of this world. They all leverage. They have an art form in leveraging. Warren Buffett, one of the wealthiest men on the planet. I mean, he leverages. He'll use other people's money, even though he's got the cash to pay for it himself. He will. Why? let the other person take on the risk.
Yeah.
It's not that he doesn't believe that whatever that enterprise that he's getting into isn't going to succeed, but he's done it enough to know that let's balance out that risk. And by the way, you never know what opportunity is going to come around the corner, and the value of that cash in accounts looks very good. Capital, one of the C's of credit. So that capital and having that behind you, even if you're not utilizing it, even if you're borrowing from a lender, we want to know that that's there. So to a novice real estate investor, start small, right? What is it? Aim small, miss small. So if someone who has never owned a home or never owned an investment property comes to a lender and says, hey, I have the opportunity to buy this 300 unit apartment complex, I don't think anybody's going to write that loan,
right?
Because there's no history of managing commercial properties. By the way, there's a lot that can go wrong in a 300 unit, and that costs a lot of money to buy one. Number two, be prepared to have some skin in the game. Almost no bank that I know of, especially with investment real estate, is going to lend 100% of that purchase price. So if it's $1 million, they're going to want to see $200,000, $300,000, $400,000 down. They want that investor to have some skin in the game, especially during the beginning. But another thing too is think about investing in this takes some forward thinking, but think about investing in opportunities that can't go away virtually. Like we learned a lot from COVID, right? There was a time where, office space, like, oh yeah, we looked at downtown, and downtown prior to COVID was just packed. Everybody came down here to work, then they'd go home to What did we learn through COVID? Well, not every job needs to report to an office. Now, some places are trying to get back into that. That's a whole different podcast as to why. But what are something you can't do virtually? Because I can work from home,
right?
But I can't live anywhere virtually. I have to have four walls and a roof. So if I'm starting out as a real estate investor, maybe I want to look at the residential aspect of it. It does have a lot of headaches, don't get me wrong. People always need somewhere to live. People will always have to also go and seek medical attention somewhere. So think about the healthcare. Dentist office. You can't go to a dentist office virtually. You can't clean your teeth on a Zoom meeting, right? You can't draw blood in a Zoom meeting, right? So there are just certain things that people will have to show up for. Those businesses have to be at that location, and those businesses are going to pay rent. So if you own the building of, say, a dental practice, the likelihood that rent's going to continue on is pretty good. Residential real estate, where folks are living, so you're going to have people move out. That happens. But there's a big need for residences right now.